Ever get that feeling where you just want to like really understand a company, like what makes it tick,
Yeah,
but without having to like drown in a sea of data?
absolutely.
So, you know what I mean? You're looking for those key insights.
The real meat.
Yeah, the real meat, the stuff that can actually like inform your decisions, and it's delivered in a way that's just like, oh, okay, I get it. And that's exactly what we're going for in this deep dive today.
Right on.
Today, we're focusing on Neurocrine Biosciences, that's NBIX if you're looking it up, a biopharmaceutical company, and they are deep in the world of neuroscience.
Complicated stuff.
Super complicated stuff.
Our mission, if you will, is to break down a whole bunch of sources, like in-depth articles, research reports.
It's stuff that most people don't have time to read.
Exactly.
Yeah.
And distill it down to what actually matters.
The good stuff.
Yeah, the need-to-know stuff. So you walk away from this deep dive with a solid understanding of Neurocrine, like where they stand right now as of April 9th, 2025.
Exactly. So we have a game plan for our time together. First half, we're going to really get a grasp on Neurocrine's core business, see what they're all about. Then we're going to size up the leadership, see who's at the helm. And then we're going to dive into their financial health, check their vitals. So let's kick things off. Neurocrine Biosciences. What's their playing field, their core business?
So basically, they're in the business of developing and commercializing treatments for a whole range of disorders, anything that affects the nervous system, the neuroendocrine system, which deals with hormones and neuropsychiatric conditions. Their mission statement, they want to relieve suffering for people with great needs but few options. They've been around since 1992, so they've built up some serious expertise in how the brain and body work together.
So how do they bring in the cash? What's their main revenue stream?
Their bread and butter is selling their own proprietary drugs. And right now, the big kahuna is Ingrezza. It's really carrying the weight.
We hear that name a lot.
Yeah.
Ingrezza, yeah.
They also get royalty payments from collaborations, the biggest one being with AbbVie for their Elagolix franchise. That includes Orilissa for endometriosis and Orion for uterine fibroids. They also might be getting future royalties from Mitsubishi Tanabe Pharma for valbenzine in Asia, so there's that on the horizon. And here's a little quirk about their operations. They actually outsource the manufacturing of their drugs. Interesting strategy, right?
Yeah.
It lets them focus their resources on research and development and on getting those drugs out to the market.
Smart. So let's zoom in on those key products. Ingrezza, you mentioned it's the heavy hitter. What's the story there?
So Ingrezza, which uses valbenazine as its active ingredient, that's their flagship product. Back in April 2017, it hit a major milestone, becoming the first FDA-approved treatment for tardive dyskinesia. We call it TD for short. Basically, it's a movement disorder that causes these involuntary, repetitive movements. Later on, in August 2023, it got approved to treat chorea associated with Huntington's disease, so it's got multiple uses. And, it's really the driving force behind Neurocrine's current success. I mean, it brought in a whopping 99% of their net product sales in 2023. So that gives you an idea of how crucial it is to their bottom line. And, this reliance on a single product, it does raise a bit of a red flag in terms of risk.
Right, putting all your eggs in one basket.
Exactly.
Makes sense.
But to be fair, they did receive approval for Ingrezza sprinkle capsules in April 2024, specifically for patients who struggle with swallowing pills.
Oh, that's good. Good to know.
Yeah.
Okay, so Ingrezza is the star player. Anything else happening in their approved products? I saw something about Crenessity.
Yeah, so Crenessity, or crinecerfont, if you want the fancy name, that's their venture into neuroendocrinology. December 2024, it got approved, and it treats both adults and kids with classic congenital adrenal hyperplasia, CAH for short. This CAH, it's a bunch of genetic disorders messing with the adrenal glands.
Complicated stuff.
Yeah, very. Crenessity, it's taken orally, and it blocks something called CRF1 receptors. It got this orphan drug designation, basically. The FDA gives incentives for developing drugs for rare diseases like this. And they also fast-tracked its review, recognizing it as an important new therapy. It's still early days in the launch, but it did rack up $2 million in sales in Q4 2024. Mostly initial stocking, though.
Okay, early stages.
Yep.
What about stuff in the pipeline? What are they working on for the future?
They have a pretty packed pipeline. They're looking to expand the use of valbenazine, testing it out for schizophrenia and dyskinetic cerebral palsy. Those are in phase 3 trials right now. Then, in the psychiatry realm, they've got alsavampator for major depressive disorder, or MDD. That's in phase 3 as well. And they've got a couple of phase 2 programs running for schizophrenia and MDD, some involving collaborations with Takeda and Nisera Pharma. And even earlier on, they're exploring next-gen VMAT2 inhibitors similar to valbenazine, but potentially even better. Also, muscarinic receptor modulators. Different targets in the brain, these. And something for epilepsy, too. Lots going on.
Wow, busy.
Yeah.
You mentioned AbbVie earlier. What about those partnered products?
So the royalties from AbbVie's elagolix products, that's a nice steady income stream for them.
Yeah.
But there's also the story of ongedantes, a Parkinson's drug. They licensed it from Bile, got FDA approval in 2020, but it just didn't take off in the market. So in 2023, they gave the rights back to Bile, which just goes to show even if you get approval, commercial success isn't guaranteed.
Yeah, it's tough out there.
Yeah.
Okay, so where does Neurocrine fit in the bigger picture? Are they the top dog or more of a niche player?
Here in the U.S., they're leading the pack in the tardive dyskinesia market, thanks to Ingrezza. Their main rival in both TD and Huntington's chorea is Teva with their drug Austedo. Just to compare, in 2024, Ingrezza brought in $2.3 billion, while Austedo earned $1.6 billion. So,
Big difference.
yeah, Ingrezza has a clear advantage in terms of market share. Neurocrine also has a dedicated sales force of about 400 people. In terms of company size, their market cap has been fluctuating between $9.5 billion and $10.8 billion in early April 2025.
All right, so what's their unique selling proposition? Why should patients and the medical community care about Neurocrines?
They're all about bringing fresh, innovative therapies to the table, especially for conditions where there's a big gap in treatment options. Take Ingrezza, for example, first approved treatment for TD, addressing a major need. Crinecerfont, it's offering a new way to manage CAH, which hasn't seen many advancements in treatment, and their pipeline. They're going after some tough conditions like treatment-resistant depression and schizophrenia, so they're tackling serious stuff.
So to wrap up this first part, what's Neurocrine's core business and how do they make money?
They're a biopharmaceutical company, laser-focused on neuroscience. They develop and sell meds for disorders affecting the brain and endocrine system. Right now, their main moneymaker is Ingrezza sales, with Crinecerfont expected to contribute more and more. And they're getting those royalties from their AbbVie partnership.
Ingrezza's a smash hit, but leaning so heavily on one product. That sounds risky.
Absolutely. While Ingrezza is doing incredibly well, this much reliance on a single product does make them vulnerable. If anything goes wrong with Ingrezza, like tougher competition from Austedo, unexpected safety issues, or problems with insurance coverage, it could really hurt their overall financial health. Diversifying their revenue streams by getting Crinecerfont off the ground and advancing their other drug candidates is super important for their long-term stability and growth.
But the fact that they took Ingrezza all the way from the lab to a blockbuster drug, that says a lot about their expertise.
Oh, definitely. To navigate all the research, the development, jumping through the regulatory hoops, and then building up the whole commercial infrastructure to reach those billion-dollar sales figures, you need some serious competence in this world of neuroscience drug development and marketing. That track record, it definitely gives you some confidence in their ability to launch new products and maybe bring other drugs from their pipeline to the market.
Yeah.
But as we saw with Ingrezza, success is never a sure thing in this industry.
Ongedantes really highlights that. Getting approved doesn't guarantee you'll make money.
Exactly. Regulatory approval is just one hurdle. There's the whole market dynamics to consider, what your competitors are doing, how insurance companies respond, even what doctors are prescribing. All these things can trip you up, even if you're a well-established company. Definitely something to keep in mind when you're looking at their pipeline, especially the drugs targeting areas where there are already lots of treatment options available.
All right, before we move on to the second half, where we'll cover management, financials, market sentiment, ownership, and risks, let's take a quick break.
Sounds good.
All right, and we're back. Let's shift our focus to the people running the show. Tell us about Neurocrine's leadership team.
Well, they just went through a big change at the top. Kevin Gorman, one of the co-founders and CEO since 2008, stepped down in October 2024. He was really the driving force behind Ingrezza's success. He's still involved, though, sits on the board of directors. Taking over as CEO is Kyle Ganas. He's been with Neurocrine since 2001. Fun fact, he's actually the lead inventor on the Ingrezza patent, so he knows his stuff.
Wow.
He's held different leadership positions in the company, including business development and strategy, so he's well-rounded. When he took over, he laid out a 4-pillar strategic plan. First, keep growing Ingrezza and make sure Crinecerfont launches successfully. Second, push forward with their pipeline of drug candidates. Third, hunt for innovative opportunities outside the company. And fourth, return capital to shareholders. And of course, he joined the board of directors too.
Makes sense.
As for the chief financial officer, Matt Abernethy's been in the role since 2017. He's got a ton of experience in biotech and medical device finance. He's been managing the money through a time of big revenue growth and some important decisions about where to invest, so he's been in the thick of it.
So what about the rest of the executive team and the board? Any other key players we should know about?
Definitely. The senior executive team, it's full of experienced people leading all the critical areas. You've got commercial operations, medical affairs, and speaking of medical affairs, they have a new chief medical officer coming in from Roche and Bristol Myers Squibb, so he's got quite the resume. Then you've got scientific research, legal, HR, regulatory affairs, and corporate communications, all solid folks. As for the board, William Rastetter has been the chairman since 2011.
Well,
Been on the board since 2010, actually.
long time.
Yeah, he's got a wealth of experience. Led IDEC Pharmaceuticals before it merged with Biogen. Also been at Biogen IDEC and Genentech. He's even got venture capital experience, so he's seen it all. His long time as chairman, it brings valuable oversight and guidance to the company.
So how has management handled tough situations in the past?
They've shown they can adapt. During the COVID-19 pandemic, they shifted their commercial strategies to deal with all the disruptions, like patients having trouble accessing treatment and clinical trials getting delayed. Going back further, they handled the discontinuation of their insomnia drug, Indaplan, and the setbacks with Ongentys. All these experiences suggest they can adjust their plans and make tough calls when they need to.
So how transparent are they with investors and the public?
They seem pretty transparent overall. They release detailed financial reports every quarter, provide guidance on what they expect to achieve, and actively participate in investor conferences and earnings calls, answering questions from analysts and investors. They also put out press releases for major pipeline developments and file everything with the SEC, all publicly available. So, yeah, they're pretty open.
Okay, what about their ethical reputation? Any red flags there?
Based on what's publicly available, there haven't been any major ethical controversies or legal problems associated with Neurocrine. They're big on their patient-centric mission, and their corporate governance practices seem to be in line with industry norms. Of course, the whole pharmaceutical industry faces ethical questions about drug pricing and marketing, but no specific issues have come up for Neurocrines.
So, given their track record and the current team, is this leadership honest, capable, and shareholder-focused?
Well, in terms of honesty, their consistent communication and lack of scandals point to a certain level of integrity. On capability, they've got Ingrezza's success, Crenessity's approval, and a pipeline that's moving along, so that shows expertise across the whole drug development process. The planned CEO transition also suggests they're thinking ahead about succession, which is good. As for shareholders, they recently started big share buyback programs. That happened when they thought their stock was undervalued, so it definitely shows they want to reward shareholders and potentially increase the stock price. But there has been a lot of insider selling lately, which is something investors should keep an eye on.
Insider selling at the same time as buybacks? That's confusing for investors.
Yeah, it's worth paying attention to. Buybacks can signal that management thinks the stock is a bargain, but a bunch of insider selling, even if it's planned in advance, can make people wonder if they're not so confident about the company's short-term future. It's something investors often analyze to try to get a sense of what the leaders are really thinking.
Right. Makes sense. Let's move on to Neurocrine's financial health. What do the numbers tell us?
Financially, they seem to be in a good spot. Their market cap has been between $9.5 billion and $10.8 billion lately, but the stock price has dipped a bit recently.
Okay.
Their price-to-earnings ratio, or PE ratio, is currently around 28 to 29. This ratio has gone up and down quite a bit over time. Analysts are predicting a PE ratio of about 24 for 2025, maybe even as low as 15 for 2026. This assumes their earnings grow as expected. Compared to the overall healthcare sector, their current PE ratio is on the high side.
So how about their revenue growth? Have they been steadily increasing sales?
Yeah, they've had strong revenue growth historically, mainly thanks to Ingrezza. Revenue increased steadily from 2021 to 2023, and in 2024, Ingrezza sales alone jumped by a massive 25%. But the company's own predictions for Ingrezza sales in 2025 suggest this growth might slow down to around 9% to 13%. While analysts still think their overall revenue will grow, the market's watching this potential slowdown closely.
And profitability, that's key. What are their profit margins like?
Their gross profit margins are sky high, around 97.5% over the last 12 months. It was even higher in 2023 at 98.4%. Their operating profit margin and net profit margin have also been climbing steadily over the past few years. This shows they're becoming more efficient and profitable as they grow.
What about their balance sheet? Are they loaded up with debt?
No, they're pretty conservative with their debt. Their debt-to-equity ratio is super low, meaning they haven't borrowed much. They also have a healthy amount of cash and easily sellable assets, giving them a nice financial cushion.
Free cash flow generation is a good indicator of financial health. How are they doing there?
They're generating strong and growing free cash flow, which gives them flexibility. They can invest in R&D, explore acquisitions or licensing deals, and even return capital to shareholders through buybacks like we've seen. Their price-to-free cash flow ratio is also looking good.
One less financial metric, price-to-book ratio. What's that looking like?
It's been between 4.3 and 4.4 lately.
So, summarizing their financial health based on all these metrics,
They look financially healthy overall, they're profitable, and have a strong balance sheet.
let's dive a little deeper into that balance sheet strength and overall financial stability. How consistent have their earnings been over time?
Their net income has been going up steadily from 2021 to 2023. But if you look further back, their earnings have been a bit up and down. Looking at their PE ratio and earnings per share from 2020 to 2024, there were times when their earnings weren't growing as consistently before this recent period of solid growth. So even though things are looking good now, it's worth noting that their earnings haven't always been so smooth.
Do they pay dividends to their shareholders?
Not currently. It's pretty common for biotech companies that are still focusing on growth, like investing heavily in R&D or using their capital for things like share buybacks.
You mentioned their low debt. Have they been actively managing their debt obligations?
Yes, they've been quite proactive about managing their debt. They recently settled their 2024 convertible senior notes with cash, which contributed to that very low debt-to-equity ratio we talked about. That shows they're solvent and financially stable.
What about their day-to-day finances, their working capital? How well do they manage that?
They seem to be managing it well. Their current ratio, which measures how easily they can cover their short-term debts, is strong, and their inventory levels are quite low, which makes sense with their outsourcing strategy. It indicates they're managing their inventory efficiently.
So to wrap up our financial discussion for now, are they prone to big swings in earnings? Are they carrying a lot of debt?
Not really. They're not overly burdened by debt. Their earnings have been growing consistently lately, but historically they have been a bit volatile, so that's worth keeping in mind.
All right, so we've taken a good look at Neurocrine's business, their management team, and their financial picture. When we come back, we'll dive into how the market feels about the stock, who the big owners are, and what risks and opportunities lie ahead. Stay with us.
See you in a bit.
Welcome back to the deep dive. We're now going to take a look at how the market is viewing Neurocrine. What's the general sentiment around the stock?
Right now, in early April 2025, sentiment seems a bit mixed, maybe leaning cautious, even a little negative in the short term, even though a lot of analysts are still pretty optimistic about their long-term prospects. The stock price has dropped quite a bit from its 52-week high.
Interesting.
One big reason for the negativity seems to be their Q4 2024 earnings report, specifically the sales guidance they gave for Ingrezza in 2025. The market thought it was weaker than expected, and some analysts lowered their price targets because of it. But the company's management has been showing confidence by authorizing that big share buyback program, remember? And technical indicators for the stock have been looking bearish in the short term.
Okay, lots to unpack there.
Yeah.
What are analysts saying about the company? What kind of price targets are they setting?
Analyst price targets for Neurocrine are all over the place right now. It shows you how much disagreement there is. The average 12-month price targets range from about $119 to $164 per share, depending on who you ask.
Okay.
If they're right, that could mean a big jump from where the stock is trading now. But like I said, some analysts have lowered their targets after that earnings report in Q4. Still, most analysts are keeping their positive ratings on the stock.
So even with the recent dip in price, the general consensus is still optimistic.
Yeah, if you look at the overall picture from analysts, most of them are still recommending to buy or strong buy Neurocrine stock. Sure, there have been some downgrades and lowered price targets, but overall, analysts are still positive.
What kind of news and events have been moving the stock price lately?
It's been a mixed bag, good news and bad news. On the positive side, they announced their new chief medical officer. They shared some promising clinical data for Ingrezza in certain patients. Their pipeline is moving forward with new clinical trials and stronger partnerships. And of course, there's that big share repurchase program. But on the negative side, that Ingrezza sales guidance for 2025 that spooks the market during their Q4 earnings call, it contributed to the stock's decline.
Okay, interesting. Let's talk about who owns Neurocrine. Who are the major shareholders?
Institutional ownership of Neurocrine is huge. Depending on the report, institutional investors own between 95% and 97% of the company's shares. And there are a lot of them, over 1,300 different institutions holding the stock. That tells you professional money managers are pretty confident about the company.
That's a lot.
Yeah.
Can you name some of the biggest institutional holders?
The top three are almost always BlackRock, Vanguard, and State Street. Together, they own a large chunk of Neurocrine's shares. Other big names include Dodge & Cox, Citadel Advisors, and Renaissance Technologies. Lately, BlackRock and Vanguard have increased their holdings a bit, while State Street has decreased theirs. Dodge & Cox and Citadel Advisors have upped their stakes quite a bit.
Okay.
Neurocrine is also in several exchange-traded funds, or ETFs, especially those focusing on mid-cap companies and the biotech sector.
What about the company's insiders, the executives and board members? How much do they own, and have they been buying or selling?
Insider ownership is pretty small, usually around 1% to 3% of the total shares. But if you look at recent transactions, a lot of executives and directors have been selling off a significant amount of their stock. This includes the CEO, the CFO, the Chief Commercial Officer, the outgoing Chief Medical Officer, and a few others from the leadership team and the board. We haven't seen many, if any, insiders buying stock on the open market lately. Some of these sales might be part of prearranged plans, but the volume and the number of people selling is something for investors to think about.
Interesting. So how concentrated is the ownership at the top? Do a few big shareholders call the shots?
Yeah, ownership is quite concentrated. The top 25 institutional shareholders own about 60% of the company's shares. And just the top two, BlackRock and Vanguard, control about 25% together. This means their decisions and how they feel about the company can have a big impact on the stock's trading and its overall value.
So how does this high level of institutional ownership affect the company's corporate governance?
With so much stock in the hands of institutional investors, there's usually a lot of focus on things like corporate governance practices, executive pay, and the overall strategy of the company. These big investors have a lot of voting power, so they can influence who is on the board of directors and major decisions the company makes. That insider selling we talked about, especially with the company doing buybacks at the same time, might make these institutional investors take a closer look at whether management's actions are really in the best interest of all shareholders.
Finally, what about short interest in Neurocrine stock? Are there a lot of investors betting against the company?
Short interest has gone up a bit recently. As of mid-March 2025, about 3.3 million shares were sold short. That's up from earlier in the year. But as a percentage of the total shares available for trading, the short interest is still pretty moderate, around 3.3% to 3.4%. And the days to cover ratio, which tells us how long it would take short sellers to buy back those borrowed shares, is also pretty low. That means they wouldn't have too much trouble closing their positions if they needed to. Another interesting thing, the cost to borrow Neurocrine shares for short selling is very low right now, and there are plenty of shares available to borrow.
Okay.
This suggests there's not a huge demand to short the stock compared to the supply of shares available for borrowing. So there's some bearish sentiment out there, but it doesn't look like there's a big risk of a short squeeze happening.
So it sounds like we've got analysts who are mostly positive, a market that's a bit nervous, tons of institutional ownership, insiders selling off stock, and a moderate level of short interest.
It's a mixed bag for sure. Exactly. All those institutions holding the stock probably create a good level of stability in the long term. But the insider selling and the recent increase in short interest could mean that some investors are worried about how the company will grow in the near future, especially with Ingrezza. Analysts staying optimistic suggest they see long-term value that outweighs these short-term concerns, but the wide range in their price targets shows there's a lot of uncertainty about when and how that value will play out.
All right, let's get into a SWOT analysis. What are Neurocrine's key strengths?
Their strengths start with their leading position in the market and the huge success of Ingrezza. Financially, they're in a good place, profitable, high gross margins, low debt. They've got deep expertise in neuroscience, a promising pipeline with Crenessity just added to their portfolio, strong intellectual property protection, and an experienced leadership team. So they've got a lot going for them.
Okay, but what about weaknesses? Where are they vulnerable?
Their biggest weakness is how much they depend on Ingrezza for their revenue. And there are concerns about whether its growth will slow down with competition heating up. They're also relying on their pipeline to deliver future growth, and there's always a risk that those drugs won't pan out. They also depend on partnerships for some of their revenue, and they rely on just a few manufacturers for their drug supply, which could cause problems down the line.
Makes sense.
Yeah.
What are their biggest opportunities?
They've got tons of opportunities. They can still reach more patients with tardive dyskinesia. They need to make Chronicity a success in the CAH market. They've got those late-stage pipeline candidates targeting depression and schizophrenia that could be big. They could expand their current products into new countries. They could even get Ingrezza approved for new uses. And they've got the financial strength to acquire or license new drugs or technologies. So a lot of potential for growth.
And finally, what threats should they be worried about?
Well, Teva's Austedo is becoming a bigger competitor in the TD and Huntington's markets. They might see pressure from healthcare payers to lower drug prices or change reimbursement policies. There's always the chance of regulatory setbacks for their pipeline drugs. And eventually, Ingrezza's patent will expire, which could lead to generic competition. Broader economic factors could impact the healthcare sector, and the reliance on a few manufacturers makes them vulnerable to supply chain disruptions. So there are definitely some challenges out there.
So looking at this SWOT analysis in our discussion so far, what are the biggest risks for potential or current investors?
The biggest risks are definitely tied to Ingrezza. It brings in most of their revenue, but it might not grow as fast as it used to, especially with more competition. The success of their pipeline is another big factor. If they can't bring new drugs to market, their growth will slow down significantly. They've also got Austedo breathing down their neck, and launching new products like Chronicity and future pipeline drugs always comes with risks. The whole pharmaceutical industry faces regulatory and pricing pressures, which they can't ignore. And remember their reliance on a few manufacturers. That makes them vulnerable if anything disrupts their supply chain. And of course, there's always the risk that the company won't perform as well as the market expects, which can impact their stock price. So, lots to keep in mind.
It seems like Neurocrine has a solid base and some promising opportunities, but the key questions are whether Ingrezza can keep winning in a more competitive market and whether they can successfully launch new drugs from their pipeline.
Exactly. They built a great business with Ingrezza, but how they deal with competition and how well they execute their pipeline will determine their future growth and whether their current valuation is justified.
Well, we've covered a lot in this deep dive into Neurocrine Biosciences. We looked at their core business, their management, their financials, market sentiment, ownership, and the risks and opportunities they face.
To sum up quickly, Neurocrine is a company with a strong product in Ingrezza, solid financials, and exciting opportunities in their pipeline. But they do face significant risks, especially their dependence on Ingrezza and the need to launch new drugs successfully to diversify their revenue and keep growing.
So, to you, the listener, thinking about all of this Ingrezza's success, the challenges of drug development, and a competitive market, what do you think lies ahead for Neurocrine Biosciences in the long run?
That's a great question to ponder. And on that note, if you found this deep dive helpful, and you'd be interested in a deep dive specifically focused on the competition between Ingrezza and Austedo in the tardive dyskinesia market, let us know. We'd be happy to dedicate a future episode to that based on your interest in how the market unfolds.
Yeah, definitely tell us if you want to hear more about Ingrezza versus Austedo. And if you enjoy these deep dives, make sure to subscribe to the Stock Analytics AI YouTube channel.
Just a quick disclaimer. This analysis is based on information available as of April 9th, 2025. Financial analysis always involves some uncertainty, and this isn't financial advice. Also, keep in mind that we used AI tools to gather and analyze some of the information. You can find all the sources we used in the episode description.
Thanks for joining us for this comprehensive look at Neurocrine Biosciences.
We hope this gave you a good shortcut to understanding this complex company.
Our goal is always to take complex information and boil it down to what really matters. Hopefully this deep dive did that for you. We encourage you to think about everything we've discussed and maybe revisit your own analysis of Neurocrine Biosciences. Until next time, thanks for listening.
See you next time.